In this video, we will walk through how to file your personal tax return in Denmark in a clear, structured way, so you can feel confident that you are compliant, accurate, and taking advantage of the deductions available to you. We will focus on the key steps for most individual taxpayers: understanding the Danish tax system at a high level, reviewing your pre-filled return, updating key information, adding relevant deductions, and finally approving and submitting your annual tax assessment. While individual circumstances differ, this overview will give you a solid, practical framework you can apply immediately. To start, it is important to understand that Denmark operates a comprehensive, largely pre-filled tax reporting system overseen by the Danish tax agency, Skat.dk, primarily through its online platform, Taste available via Skat.dk. Each year, the authorities automatically receive information about your salary, pension contributions, interest income, unemployment benefits, student grants, and many other income types from employers, banks, and public institutions. This information feeds into your årsopgørelse, the annual tax assessment, and your preliminary income assessment, the forskudsopgørelse. In many cases, your return will be almost complete when you log in. Your main task is to verify, correct, and supplement the data rather than building a return from scratch. Before you begin, ensure you have your secure digital ID ready, typically Meet ID, which you will use to log in to Skat.dk. Once logged in, navigate to the Taste section for individuals and select the relevant income year. If you are reviewing the previous tax year, you will see your årsopgørelse, along with a status showing whether you have underpaid or overpaid tax. If you are planning ahead for the current year, you will primarily work with your forskudsopgørelse, which determines your withholding and helps you avoid surprises later. Focus first on verifying your personal data. Confirm your civil status, address, and municipality, commune, as these can influence specific deductions and municipal tax rates. Next, review your income sources as reported. Under the Salary and Employment section, check that your employer's name, corporate ID, and the reported gross salary match your payslips for the year. If you have multiple employers, make sure each is listed and that no income source is missing or duplicated. For self-employment, freelance work, or side activities such as consulting or online sales, the responsibility is on you to report accurate income and expenses, often via business-specific forms. In these cases, carefully document your revenues and deductible business costs and transfer the net result to the relevant fields. Move on to other income categories. Review interest income and expenses reported by banks, including regular accounts, savings, and loans. Ensure that mortgage interest from your real estate is correctly stated, as this directly affects your tax position. Check any investment income, such as dividends and capital gains, especially if you hold shares or investment funds through foreign brokers, where some data may not be fully reported automatically. In those situations, gather bank statements and broker reports to ensure complete and accurate reporting, noting that the Danish rules distinguish between share income, capital income, and other financial gains. Once your income is validated, turn to deductions, which are central to optimizing your return. Start with employment-related deductions, known as befordringsfradrag, for commuting, and a-kasse, and union contributions. For commuting, the system may not automatically know your exact distance to work, so input the number of days you commuted and the distance between your home and workplace, following the thresholds for when the deduction applies. For unemployment insurance fund contributions and trade union fees, verify that the amounts reported by the respective organizations are correct. If you relocated for work or incurred documented job search expenses across borders, explore whether specific rules apply. The Danish tax agency's website provides guidance here, and for more complex mobility cases, professional advice can be valuable. If you own a home, verify your mortgage interest deduction and any associated property tax details that impact your return. For those contributing to pension schemes, such as employer-sponsored pensions or private pension plans, review the reported contributions, and confirm they align with your payslips or pension statements. Contributions to certain pension schemes are tax deductible within specified limits, and tracking these amounts accurately ensures you neither miss a benefit nor exceed allowable caps. Most Danes will also want to review deductions related to charitable donations if applicable. Approved charities usually report donations directly to the tax authorities, but it is still wise to verify the amounts and add any missing contributions, making sure the organizations are eligible under Danish rules. If you have international elements, for example, income from another country, foreign property, or if you moved into or out of Denmark during the tax year, you will need to pay particular attention. Denmark has numerous double tax treaties designed to prevent the same income from being taxed twice, but the practical application of these treaties can be nuanced. Ensure that foreign salary, pensions, or investment income are reported in the appropriate sections and that any foreign tax paid is documented, so that relief for double taxation can be calculated correctly. In cross-border situations, review carefully the guidance on Skat.dk and consider consulting a tax advisor for complex arrangements or significant amounts. Once you have systematically checked and updated your income and deductions, review the summary provided in your årsopgørelse. The system will show whether you have a refund due or an outstanding payment. If you owe tax, pay attention to the deadline for settling the balance and the interest rules that apply after certain dates. If you are entitled to a refund, confirm your registered bank account so that the payment is processed smoothly. Before you finalize, take a moment to sense-check the overall result against your expectations. Does the final tax align roughly with what you would anticipate based on your income level and prior years? Large deviations can signal missing income, incorrect deductions, or a misclassified item, and it is safer to question and correct now than to respond later to a tax audit or adjustment. When you are satisfied, formally approve the return through TasteSelv. The portal will confirm your submission, and you should save or download a copy of your årsopgørelse for your personal records. Keeping a simple annual file with payslips, bank and mortgage statements, pension summaries, and your final tax assessment will make future years faster and more straightforward. To stay ahead, it is also good practice to update your forskudsopgørelse when your circumstances change. If you receive a salary increase, change jobs, buy a home, start a side business, or move municipality. Adjusting your preliminary income assessment during the year helps keep your withholding aligned with reality, minimizing year-end surprises and improving your cash flow. While Denmark's tax system is relatively user-friendly and highly digitalized, responsibility still rests with you as the taxpayer to ensure that the information is correct and complete. If at any point you are uncertain, leverage the resources on Skat.dk, including guides and FAQs, and consider seeking professional advice, especially if you have significant investments, business activities, or international ties. By approaching your Danish personal tax return with a structured checklist, log in securely, verify personal data, confirm all income, optimize relevant deductions, handle any cross-border elements, and then approve and retain documentation, you can navigate the process with confidence. This disciplined approach not only reduces the risk of errors and penalties, it also ensures you make full and legitimate use of the reliefs and deductions that the Danish system provides.